All right, here we go. So we're going to talk real quickly about what DeFi is. And DeFi, of course, stands for decentralized finance. So the idea of something decentralized, of course, is to take out the centralization. So when we start thinking about decentralized, we have to go back to the origins of DeFi, of crypto, and of course that is Bitcoin. And the idea of Bitcoin is that this group of people wanted to give us a decentralized form of money, some form of money that would take us away from the banking system and take us away from the governments that controlled the value of money and controlled the transfer and the supply of money. Okay, so they gave us Bitcoin, and Bitcoin has been incredibly successful in giving us decentralized money. It gave us the ability, it gave those of us that connected to the network the ability to not only create it, but also to move it back and forth across the world. So Bitcoin gave us the first money, okay? And decentralized money was really important. This was the ethos, this was the idea of Bitcoin. But those that created it weren't sure it was going to work, and they weren't sure that it was going to be successful. And what happened was, it became incredibly successful. We can discuss, you can go back and forth and discuss whether or not the success was based on things like drugs and guns and all these other reasons that you might use Bitcoin to transact around the world. But the fact of the matter is, Bitcoin has been successful in this ability to transfer value, transfer money anywhere in the world at any time without having to ask anyone's permission. And that's what's so important about Bitcoin. Now, the problem with Bitcoin wasn't really programmable, okay? And of course, there's some debate about that. But you had decentralized money, decentralized value that can move back and forth around the world, but we didn't have the ability to actually program it and tell it what to do. So, some of the geniuses that created, that are developers, programmers, and such said, we really like what Bitcoin has. We like the idea of money that we can move back and forth around the world, but we can make it better. How do we make it better? We have the ability to program money, program value. So decentralized finance essentially has given us the ability to take money, take this decentralized idea of money, and now add programmability.
I'm going to talk to you today about how to get started with yield farming. And I think it's really important to watch this to the end because I cover the risks of yield farming. And then also pay close attention to everyone speaking after me, including what Adam just covered, because I think it's good to understand those fundamentals. That you're not diving into something without fully understanding it. So, of the DeFi protocol or application, it's because of the fact that we can trade permissionlessly on tools like Uniswap. No one can stop me from putting my governance tokens onto Uniswap and then allowing buyers and sellers to battle each other for what the price is. So at the end of the day, teams in DeFi right now are, I would argue, are more focused on creating loyalty and creating an active participating community using their application. However, these governance tokens can be traded on exchanges like, and I mean decentralized exchanges like Uniswap or Balancer. And so that anyways comes with a certain monetary value. All right, so next.
I will have a slightly different focus today on my talk. It's what you're missing on DeFi. So I will start taking my time. So basically, I will try to speak about DeFi in a high level. So I will not go a lot into the details. So total value log has grown more than 10x. There are many new projects that are launching on a weekly basis, high quality teams, high quality products, and which are really, and many of these are real breakthroughs from the technological standpoint. If we take a look at this screen, here we are looking at the DeFi Bulls leaderboard. So these are all like the leaderboard of the DeFi protocols. If we check out in April, we have like 24 on the leaderboard. Now in August, a few months afterwards, we have so many that it doesn't even fit on my screen now. So the growth has really, really been amazing, and this is something that that it continues to happen week after week. It's becoming, even for the most DeFi head users, it's becoming increasingly difficult to be able to be on top on everything that is happening. And I think DeFi Dad and Adam both mentioned that this since these are trustless or decentralized protocols, one of the magic things about them, it's not really magic, but one of the great things about all of these projects and protocols is that they are interconnected, so they are transferring value among them. So if we have when new projects and protocols get on board in DeFi and add value, that automatically can be transferred with the others and interacting with the others, and in that way we get like
DeFi Dude, strong community management over at Aave. Today I'm going to be doing a quick presentation just about all the risks in DeFi. There's a lot going on in DeFi right now, a lot of craze, and with it, obviously a lot of risks. So I'm going to go ahead and share my screen. Here in the middle here, you've got crypto and Ethereum, right? So there is inherent risk with just using crypto and Ethereum. I mean, let's say we've got like seed phrases, private keys. I don't even have my own parents manage their seed phrase because they, it's very hard to relay the message of like, okay, these 12 words or these 24 words, this is your master password. There's no username. You can't change your password. You can't just change your seed phrase. You quite literally, would have to get a whole new account or wallet in that case, back it up, move everything over. So, so there's risk alone in securing your own wallet, backing it up, making sure no one can find it. You've got volatility as well. Obviously crypto is very volatile, so that's a risk in itself. And things like that, centralized exchanges being hacked, those types of things. But then you have the smart contract risks or DeFi risks in general. And now I kind of separate these between DeFi and DeGen-Fi, as I like to call it, which is kind of what I would refer to as like the more recent DeFi as DeGen-Fi. But going back, the smart contracts and regular DeFi, I guess I would kind of group those together for risks. So where the risk comes from that, a lot of it is to do with, there's two big ones, which I'm going to touch on later, but it would be regular smart contract exploits, as we saw back in 2017, 2018. A good example is the parity multi-sig exploit. We had over $100 million in Ether just sitting in the multi-sig. And then some guy comes along and he's like, hey, your code is vulnerable here. You should do something about it. And then, 10 minutes later, oops, I killed it.
Probably the most important part. Then again, I'm biased because it's my part, right? So something that the DeFi space is on about a lot is DeFi a Ponzi scam? Because there's a lot of pumps and dumps. Everything on Twitter is about shilling all these different projects and like all the risks. So saying that, is DeFi another name for Ponzi? DeFi is basically ICO 2.0 where people are pumping and dumping, and how DeFi is all very, it's all fluff and just scams. And if you go online, you see that on Twitter, everything is just memes. So with all these memes and with all these, jokes going around, it's like, is this even serious? And why should I join? And how is this a legit thing? And how are people getting money? How is it, 100% returns, annualized returns? Because where's the money coming from? Where are all these yields coming from? Is it just people swapping tokens with each other or people trading with each other? But it's just within the circle, within this little pyramid scheme. So if you look at the mechanisms that we have today, and all the four other speakers have talked about it, we have things like liquidity mining. You have it on Uniswap, on synthetics. You have yield farming. You have compound. You have ham. You have spaghetti. You have pasta. You have sushi. You have a lot of these kind of different projects and different mechanisms. And it does feel quite like a Ponzi because it feels like the initial people who are in the space are these VCs. So as a protocol or as a project, you need some funds before you get started, because you need to hire developers, you need to hire engineers. And where do you get the funds from? Usually you go to the VCs. So the VCs will be giving you some funds, and in exchange, they will keep your tokens. Once the